This question tests your understanding of the conceptual framework for financial reporting, specifically the underlying assumption used when preparing financial statements. The key phrase is underlying assumption. In accounting, an underlying assumption is a fundamental premise on which financial statements are prepared. According to the IASB conceptual framework, financial statements are normally prepared on the basis that the entity is a going concern, meaning it will continue operating for the foreseeable future and has neither the intention nor the need to liquidate or significantly reduce its operations. Students often confuse assumptions with accounting principles or qualitative characteristics. Therefore, it is important to distinguish between going concern and underlying assumption. Accrual basis, a basis of accounting used in preparing financial statements. Materiality and substance over form, accounting concepts/principles, not underlying assumptions. The question is testing whether you can identify the specific concept that serves as the foundation for preparing financial statements. A. Going concern correct. This is the correct answer. The conceptual framework assumes that an entity will continue in operation for the foreseeable future. Assets and liabilities are measured and classified based on this assumption. If a business is not a going concern, different valuation methods may be required. B. Materiality. Materiality is an accounting concept that determines whether information is significant enough to influence users' decisions. It is not an underlying assumption. C. Substance over form. This principle requires transactions to be accounted for according to their economic reality rather than merely their legal form. Although important, it is not an underlying assumption. D. Accruals. The accrual basis is a method of accounting that records transactions when they occur rather than when cash is received or paid. It is a basis of preparation, not the underlying assumption referred to in this question. Exam tip. When program asks for the underlying assumption in the conceptual framework, the answer is almost always going concern. Do not confuse it with accounting principles, such as materiality, prudence, or substance over form. Correct answer. A. Going concern. This question tests your understanding of the conceptual framework for financial reporting, specifically the distinction between fundamental qualitative characteristics and enhancing qualitative characteristics. The IASB conceptual framework identifies fundamental qualitative characteristics, relevance, faithful representation. These characteristics make financial information useful in the first place. Enhancing qualitative characteristics, comparability, verifiability, timeliness, understandability. These characteristics improve the usefulness of information that is already relevant and faithfully represented. A common exam technique is to replace comparability with consistency because students often think they are the same thing. However, consistency is not listed as a qualitative characteristic in the framework. Instead, consistency helps achieve comparability. Therefore, when answering such questions, remember the exact list of 4 enhancing qualitative characteristics, rather than relying on similar accounting terms. A. Verifiability. Enhancing qualitative characteristic. Verifiability means that different knowledgeable and independent observers could reach a consensus that information faithfully represents what it purports to represent. This is one of the 4 enhancing characteristics. Incorrect option. B. Timeliness. Enhancing qualitative characteristic. Timeliness means information is available to users in time to influence their decisions. Old information may lose its value. Incorrect option. C. Consistency. Not an enhancing qualitative characteristic. Consistency refers to using the same accounting methods from period to period. It helps users compare financial statements over time, but it is not itself one of the 4 enhancing qualitative characteristics identified by the conceptual framework. Correct answer. D. Understandability. Enhancing qualitative characteristic. Understandability means information is classified, presented, and described clearly so that knowledgeable users can comprehend it. Incorrect option. Correct answer. C. Consistency. Exam tip. Memorize the 4 enhancing qualitative characteristics as CUTV, comparability, understandability, timeliness, verifiability. If you see consistency in an MCQ, remember that it supports comparability but is not itself an enhancing qualitative characteristic. This question tests your understanding of the purpose and status of the IASB conceptual framework. Many students confuse the conceptual framework with IFRS standards themselves, so it is important to distinguish between the two. The conceptual framework is not an accounting standard. Instead, it provides a set of underlying principles and concepts that guide the development and application of IFRS standards. Its main objectives are to improve consistency and help resolve accounting issues when no specific standard exists. When answering this type of question, remember these key points. The framework helps the IASB develop new standards and revise existing ones. It assists preparers in developing accounting policies when no IFRS specifically applies. It helps determine appropriate accounting treatments for transactions not covered by existing standards. It is not a set of mandatory accounting rules. If there is a conflict between an IFRS standard and the conceptual framework, the IFRS standard takes precedence. Therefore, look for options describing a guidance or support role rather than a rulemaking or authoritative role. A. To assist preparers to develop consistent accounting policies when no standard applies to a particular event. Correct. One of the primary purposes of the conceptual framework is to help preparers develop accounting policies for transactions or events that are not specifically addressed by an IFRS standard. This promotes consistency and comparability between entities. B. To issue rules regarding the accounting treatment of elements in the financial statements. Incorrect. The conceptual framework does not issue accounting rules. Accounting requirements are contained within individual IFRS standards. The framework provides principles rather than mandatory rules. C. To assist in determining the treatment of items not covered by an existing IFRS. Correct. This is another key purpose of the framework. It serves as a reference point when an accountant encounters a transaction or event for which no specific IFRS guidance exists. D. To be authoritative where a specific IFRS conflicts with the conceptual framework. Incorrect. A specific IFRS always overrides the conceptual framework. The framework does not have higher authority than an IFRS standard. Correct answers. A. To assist preparers to develop consistent accounting policies when no standard applies to a particular event. C. To assist in determining the treatment of items not covered by an existing IFRS. Exam tip. Remember the phrase, framework guides, IFRS rules. The conceptual framework helps when guidance is missing, but it never overrides an existing IFRS standard.